Hello, everyone. This is Martin. Welcome back for another weekly update. And this time we're looking for trading opportunities for the month of May, starting off with May the 2nd to May the 6th. That's the first week. And this week, we're looking for more great pullback trend continuation trades. What's really interesting, last week we had some really terrific ones, and we're going to look at some more of these setups for this coming week. And I'm also going to highlight or take a look at one or two currency pairs, look at them in depth, and give you a bit of a lesson again on the simple swing pullback, breaking the trend line and continuation trade. Okay, so we'll do that as well. And we're going to start off, as we always do, with the Euro USD. Okay, you can see here the Euro USD weekly chart, and you can see price basically has been moving up and down within a channel. This is a bullish channel, slowly edging its way upwards. You can see here's the upper trend line, here's the lower trend line. But last week, actually a couple of weeks ago, we had a break of this triangle. You can see the triangle right here, and that means we are in a buy zone. You can see also with the MACD. So we broke the trend line to the upside. And do you notice something really interesting? Last week we had a huge bullish engulfing candle. Okay, so now I'm going to drill down to the daily chart. So here's the daily chart again of the same pair, the Euro USD, and you can see we basically had 5 huge up days, all bullish white candles. And the only thing that I'm taking a look at right now is to the left over here. You can see these are previous candles, previous swing high, okay? And also a major key resistance area that you can see highlighted in gray. So um, even though the bias is to the upside, I'm thinking that price is probably going to pull back. Okay, and that's the thing I'd be wanting to perhaps wait for better evidence to the upside. Okay, here I'm switching to the LEOD chart, the lazy end of day, and you can see we had a break of a candle to the upside. However, again, take a look to the left. I'm just going to put in a rectangle. You can see here we are at an area of resistance, so I kind of, want to just caution you on that. I'm not too sure if you should take a buy trade right now. I probably would wait and wait for a pullback down here or a bit of a pullback and then wait for bullish evidence to the upside, or take a buy stop order above the 114.55 level, 114.55, 114.56. Taking a buy stop order there. The only thing is, again, like I said, this is resistance. Here you can see on the LEOD, we had a terrific breakout here, and this candle, see this white candle right here? It actually broke above the yellow line. The MACD is above zero. Take a look below, and the blue line, the RSI, is above the yellow sentiment line. So with this candle right here, if you would have gotten in right there at the open of that candle, uh, that would have been excellent for at least 9,500 pips. Okay, we also had some trading opportunities on the over here. If you take a look at the price action chart, and you can see here is the 21 line right here. The yellow line is just slightly above here. So with these candles rising higher, here we have a chance for a what's called a simple swing. Again, drawing a trend line, joining up the peak over here. This is a peak as opposed to a valley, which is this is a valley, here's a peak, here's another peak. Drawing a trend line here, waiting for this break. I probably would have opened up a trade right above there, and that would have given you some good pips as well. However, take a look. Here is a peak right there, and you see with this candle right here, drawing a trend line here, would have gotten you probably in a little bit earlier. And again, let's just go down to the 4 hour, and this is what I'm talking about. Okay, so there we go. Your perspective changes quite a bit on a 4 hour. And again, the first trend line I drew was up here, waiting for the breakout. Look at that, another mini pullback with a pin bar, and a golfing candle. Do you see that white candle right there? And a golfing bullish candle getting in right there at the open of the next one would have given you, like I said, 100 pips. However, taking a look here, drawing a more aggressive trend line here after this happened, and this is a peak because look, we have an up candle and a down candle. So uh, again, this candle here broke, and you could have gotten in perhaps there with a swing low just below here and maybe a little bit earlier. But again, that's an example of the swing trade. The daily would have given you an opportunity. The 4 hours certainly right here. The and it's something that you got to keep looking for every day. Look at your charts and see what's coming up. Always anticipate where price is going to go. I'm going to switch to the British Pound USD. And here you can see last week we had another huge bullish candle to the upside. This is the weekly chart. However, again, take a look. Previous swing high right here. Previous another long-term swing low right here. So this is another key resistance area. Will price go higher from here? Well, I don't know. All you can do is wait and see. And again, price because price is against or right near resistance, you want to just have some bullish evidence to the upside and either take a buy stop or about 10 pips above the high here, which is 146.69. So we're talking 146.79 around there. Buy stop order to the upside or waiting for a bit of a pullback and then looking for bullish evidence to the upside. Okay. So this week, I believe we are trending higher, but again, just wait and you're looking for evidence. And now I want to go down to the uh, I'm sorry, I want to go down to the daily chart. And again, you can see on the daily chart, price broke out of this triangle right here. This is upper trend line, which defines the upper edge of the ascending, I'm sorry, the symmetrical triangle. We had a breakout pullback from the 100, and now price seems to be heading all the way up to the 200, which is this red dash line here. However, again, we are at another, like I said, on the other chart I showed you in the weekly, we are at an area of major resistance. Again, take a look to the left, and it also goes if you um, looked at more data on the chart. In other words, zoomed this or minimized this chart and added more price bars to the left, you would see that this is a major resistance area. So price is probably going to go bounce up and down. And you can see on Friday's close, right there with that candle, that was a doji. So obviously signifying a possible exhaustion and possibly for price to come back down. So here I would either wait for a pullback and then looking for bullish evidence to the upside, or taking a buy stop order about 10, 12 pips above the high of that, okay? And just want to have a quick look on the LEOD. Well, you can see the train has actually left the station a long time ago. We're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9 days ago. Again, this is another reason for looking at your charts, and I'm always recommending keeping the LEOD charts right beside the price action charts, going back and forth. This is what I mean. Take a look below where my cursor is. So on the left here, I've got the price action. On the right, where my cursor is, I've got the LEOD. You should not have missed this, guys. Okay, and once you saw price here, we were close to resistance. You can see to the swing high on the left. However, even getting in here, your stop loss would have been below the yellow, okay, and that would have given you lots of cushion. Here, the blue line is above the yellow line, and or waiting for a pullback. And again, here is your bullish engulfing candle right there, getting in. Well, waiting for here because this price probably did come down. So getting in around here, you would have made some pretty good pips. So either way, notice I've drawn a trend line from swing high here to joining this high and down here. So this is the candle that was the candle that broke the upper yellow line. That's the one that you want to see when it comes to trading on the LEOD charts. Okay, so the next one, we're going to go to the Australian USD Weekly. And this is again interesting. You can see slowly prices grinding up higher on the weekly. Okay, so I do expect price to continue going higher and again all the way up to this right here to this resistance area in gray. I've highlighted that already for you, and to meet up with at least the 100 moving average. However, what happened last week? Well, you can see this huge bearish engulfing candle, okay? And that's important because it shows that sellers came in basically because of bad news last week, bad economic news, and that not necessarily U.S. strength, but more just bad economic news that came out of Australia, and I believe that price is going to come down just a wee bit more. Okay, but caution, caution, caution. We have I believe we have the Australian uh, bank rate that's coming out on Tuesday. And the reason I mention this because we had and there's a good reason we had a bearish, big, huge engulfing candle. I'm going to switch to the daily, so I do see price coming down a little bit lower, maybe down toward the swing low here. But with the Royal Bank of Australia coming out with the rate decision on Tuesday, and I believe it is what time is it? I believe it's Tuesday, 12:30 in the morning or something like that. And what's going to happen is if Australia does not lower its interest rate, in other words, if they keep the same interest rate, I believe this is kind of the calm before the huge upswing move again. So I believe price is first going to come down in the next at the market open on Sunday, Monday, and then with the pretty good news, I guess, for when the bank does not lower its interest rate and keeps it the same, then that often will propel a currency just to become really strong in the short term. And so I believe this pair is going to go much higher again and continue its upward trend. You can see here the MACD is still above zero. It is declining. The histo bars are becoming smaller, but that's just because of um, some bad economic news over the last week or so, last 3 days. And I believe as soon as the bank rate comes out and the announcement that they will not change their interest rate, well, this is what I believe, anyways. I mean, anything's possible, but if the Royal Bank of Australia, the RBA, does not reduce its interest rate, then I believe, boom, the Australia this pair will go much higher really quickly, maybe 100, 150 pips higher. Okay, so there could be some volatility there. Just be aware of that. Now, really quickly, we're going to go to the you can see here the LEOD. This is the weekly. I want to go down to the daily. So again, really quickly, here's another bit of a lesson. This is a weekly chart, down, down, down. So we're in a major downtrend, right? Going to draw in a trend line, okay? And just a second here. I'm going to show you something. Let's take that high there. Right there. Okay. As soon as price breaks this trend line, okay, you see that trend line right here? As soon as price breaks it with this big white candle and also above the 50, we are now considered to be in the buy zone. So that's what you saw in the price chart, previous price chart. Price is slowly been edging higher, and I believe price is still going to go up much higher to at least this area right here to meet up with the swing high. Okay, so price, I believe, could go higher. Right now, it looks like it's going to go down lower again before the bank rate news and then possibly shoot all the way higher. So just be aware of that. The histo bars are above zero. Okay, now we get to the New Zealand USD Weekly. Okay, you can see here the New Zealand USD Weekly, exactly the same pattern forming as the previous currency pair, the Australian US dollar. So we're in an uptrend channel. However, the big difference was that last week we have a huge bullish engulfing candle, whereas the Australian US dollar, we had a bullish engulfing, I'm sorry, we had a bearish, huge bearish candle. So here we're the complete opposite, showing you that New Zealand is still gaining a bit more strength. And I believe we can go further to the upside on this pair. Okay, you can take a look. Here's the daily chart. I just went down to the daily chart, and the last 2 days, last week, we had a very huge up move. I believe price is going to go higher, but but right now, what I'm thinking is, if anything, I would place a because we're approaching the 700 round number. You can see on the right side there. I would place, if anything, if we're thinking that price is going to go higher, placing a buy stop order above this level, which is really above the 70. I'm taking a look here at my notes. Above the 70, 15, 16 area. Okay, so above there by stop order, and then price most likely is going to go higher. And you can see the channel. So price comes up through here. It's just going to keep going higher. Okay, or you can just wait to see what happens after the Sunday Monday trading. Here's another great example of a pullback breaking the trend line, swing continuation. Take a look at this, guys. Here we have, obviously, we have support, right? The 21 is this red line, the 21 EMA. The yellow here is the 8. But so price went all the way up to touch the top of that channel line. I've already drawn that in. You see, here's a swing high, here's a swing high. You just joined the tops, right? But it bounced back, and this is a U-turn, and all of a sudden price starts coming back 1, 2, 3 days in a row, and we have to anticipate at some point price to swing back up. So if we're saying we're in an uptrend, which we are, confirmed by the MACD, and also confirmed on a long-term chart. Okay, let me just quickly go. See, uptrend. Once we broke this downtrend over here, again, I'll draw you the trend line. Okay, so there you can see that downtrend all the way. We're in the sell zone below this trend line here, sell zone, sell zone. All of a sudden, price breaks up above this trend line. Now we're in an uptrend channel, and we're in a buy zone. So we're looking for buy trade. So when that happens, you're looking for a buy trade. Let's go back to the daily chart. So again, looking for a buy trade. If that's what we're looking for, then we're waiting for the pullback to end, and it actually right here, you see, was a bit of um, a bullish candle. However, there wasn't a lot of conviction. You could have gotten in right there if you wanted to. You could have gotten at the open of the next one. But you see, it did not break any trend line, and that's why I drew that in. So again, you're waiting for us like a peak right here. Here's a peak. Here's another peak. You see this up candle, down candle, okay, white candle up, black candle down. So that's a peak. Join the two, okay, join the two. This is the first candle that broke that, and on a conservative level, if you would have gotten in right there at the open, you would have made some pips. You would still be in profits, but not a lot. The aggressive, and I've taught this in the first course, is knowing that you have a trend line, you're waiting for price to break above these two candles. You see the highs right here? So placing a buy stop order right there. You see right there? Okay, let me just put a trend line in. So let's say, and it's going to be hard to do that. Let me see. Okay, so a buy stop order right above these candle wick highs would have given you some pretty good pips, and you at least 61 pips in profit for now. So um, that's what you have to do is sometimes uh, anticipate something like that. Price pullback, waiting for a break of the trend line. This is not the best example. There's one fantastic example coming up later on. Okay, and here's the LEOD. Same thing. You can see that drew a trend line down, break, and this is again another classic swing breakout. MACD histobars above zero, and I'm just gonna see. Yeah, it's just peaking. The see the blue line just peaking above the yellow there, but again, that's what I see there, and so I believe it's going to continue. Just it's up to you if you want to place a buy stop order about 10, 15 pips, a little bit higher. Okay. Or I no, I was saying, I'm sorry, I was saying placing a buy stop order this time around a 0.7016 level. Okay. Now we get to the CAD weekly. Look at this, guys. How many days has this price gone down? How many weeks has this price gone down? And what's incredible from the high here all the way down, we're looking at 2,024 pips. Do you see that? That's the middle number. Okay, the middle number, 2024, 35, something like that. But that's a lot of pips. But again, this is a weekly chart, and you have to sometimes look at the weekly to see a reversal in trend direction. That's another thing that you can do. Again, joining the bottoms. I've just drawn a trend line. Okay, can you see, guys, where price broke the trend line here? Price is above the trend line, the upper trend line. Price is basically above the 21 and 8, and we have to anticipate at some point in time that price is going to come back. Did we know it's going to come back all this way? No, we didn't. But again, we have to anticipate things, and as soon as price breaks the blue 50 here, then we're looking for sell trades, okay? And again, if we switch to the daily chart, well, there's the opportunity. So again, the trend line stayed the same as I switched to the daily. Okay, you can see the MACD is below, the histobars are below zero. So using the weekly chart as the overall guidance, looking for sell trades here. Now we're looking for sell trades. Price broke the trend line here, and price then went down again. Actually, and take a look. This is interesting. See this candle right there? Isn't that a bearish engulfing candle? It completely engulfs the previous white candle, right? Okay, so you could have gotten in there, had your stop loss above the engulfing candle as we taught in the course, and you would have been in profits and made some really good money. However, if you want to wait for the swing pullback again, thinking that price is going to continue in the overall direction of the downtrend, right? Always thinking sell trade as soon as price is in the sell zone. So here's the pullback. Let's draw a trend line. Okay, take a look. Let's draw a trend line. This candle breaks it. You could have gotten in right there again, and this time your stop loss would have been above the swing high here, or if we taught you in the course, it could be above the 21. But again, another pullback right over here. I mean, how many chances, right? I mean, a lot of chances to get in. Okay, so there's a lot of chances to get in, and this is the swing pullback trend continuation. And I believe last week I said I better take a look at my notes, otherwise I'm going to forget. Just a second. Okay, for last week I said, and price stopped right here at the close on the previous Friday. So the Sunday, Monday open was right here. But I said, take a sell trade right away. If you would have done that, you would have made 120 pips. Or I said, I also gave you another number that you could look at, and I said sell below the 126.25, which is right here. And again, if you would have done that, taking a sell stop order right there, that would have given you 75 pips. So either way, selling right away at the open on Sunday, Monday, or selling with my my recommendation below 126.25, you would have made some really good pips either way. So big winner all around. Okay. And now here's the LEOD. You can see basically the train has left the station a long time ago. I mean, the best earliest, well, I mean, there's all these are trend lines I've drawn in. So you could get in after every trend line break. You can see that right here, getting in at the open of the next candle. So it's pretty clear. Here's the latest one, trend line up, right? These candles right here, they're called trend continuations. We're in the downtrend. They're continuing the same direction as the overall trend. Getting in right there would have given you some really good pips. So, I mean, you can look at different entries, different strategies. We've got the LEOD strategy. We've got the swing pullback. We've also got the breakout strategy. Just depends on what your risk factor is, okay? So again, here, overall downtrend for the US CAD. Of course, the opposite is true for the oil, and that's what the CAD currency is correlated to the in opposite correlation, I'm sorry, in similar correlation to the oil. So with oil strength, the Canadian dollar also becomes stronger. And again, you can take a look. Oil seems to be going higher, 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 and I believe eventually it's going to get to possibly around the 40 to 50 area, 50, 51 area. Okay, so oil, I believe it's going to go higher, and that obviously is going to make the Canadian currency a lot stronger. So you guys can think about that as well. And now we get to the US Swiss franc. And again, this is the weekly chart. What do we see here? Well, a huge bearish engulfing candle, right? Doesn't this candle completely engulf the previous white candle? Remember, this is the weekly chart. So where's price most likely to go? Well, most likely further down. The 100 is not as strong as the 200. The 200 is a major magnet. Again, look at the left. You see where price stopped and reversed right at the 200, down and up, down and up. Okay, so most likely price is going to come down to at least this area, down to here, and my bias is to the south side. So what you want to do again is wait for a pullback and then swing and break of a trend line. Let's go down to the daily chart. You can see that already happened. Here's the daily charts of the US Swiss franc. We already had the break of the trend line. So take a look. Notice where I start my trend line here, the swing low, the valley. Here's another valley. Join the two with the trend line. This candle broke. I would have opened a trade right there at the open of the next one. That would have given you, well, 84, 85 pips already. Okay, so that's how you do the swing trade. As long as price is below the 50, we're looking for sell trades. Okay, and again, on the long-term charts, you can see downtrend. Okay, so that's the weekly, that's the daily. Really quickly, I'm going to switch over to the LEOD. And you can see also that last candle on Friday, this is the daily chart, it broke the lower trend line. So yes, I believe it's going to go down much lower. There's open space between here and a swing low here. How much space? Um, well, there's not much room, 50, 60 pips. So again, that's a major, that would be the next logical place where price may come down to and then turn around. So it's up to you on your risk profile. If you want to wait for a bit of a pullback and then get in, that might be a better entry that way. Or take a take a sell trade right now. Your stop loss would be on the other side of this the upper yellow line, right? So your stop loss would be if you get in right sort of Sunday, Monday opening. I wouldn't. I would wait until at least that dies down. I would not really get in Sunday, Monday. But if you got in around here, your stop loss initially would be 137 pips. Sounds like a lot, but it just means that you're trading micro lots, either one or two micro lots. So that's not really big. So you're risking really one micro lot, 10 cents a pip. You're risking $13. For two micro lots, you're risking $26. Okay, just keep that in mind. You can see right now the blue RSI is below the yellow, and the histo bars are just below zero as well. So looks like the further move is to the downside. Okay, now I'm going to switch to the US Japanese. We're going to spend a bit of time on this. Uh, this you can see huge bearish candle, and this was as a result of some economic news out of Japan last week, which was favorable for, well, in the short term anyways, favorable for the Japanese pair. Although it looks like the Japanese pair has become one of the strongest pairs. And we're going to look at that as well, which currencies are strong, which ones are weak. So here, U.S. is you know, become a lot weaker against the Japanese pair. Looks like this pair is going to go down lower to meet with at least the 200 and just below the 200 before bouncing back up. So there's room to the downside on the weekly. On the daily, you can see that as well, right? And uh, that's interesting. So there's room to the downside. However, you may want to wait for maybe a bit of a pullback, then look for selling evidence to the downside. I think we had two huge moves, like two huge candles. I mean, this candle alone, guys, just take a look. This candle alone was 332 pips in one day. That was Thursday. Friday, another huge move. Again, approximately 187 pips. So with these two huge moves, I would be cautious right away. Do not get into a trade. I'm just letting you know, based on my experience, don't get into a trade right away. In other words, do not take a sell trade. Wait for evidence. Wait for a pullback first, and then look for selling evidence to the downside. Okay, because and if you're going to get in, I mean, my only caution is use a very small lot size, like as small as you can, just if you want to try something. But my advice is wait for price to come back a bit before looking at sell opportunities. These these two moves are just too big, too fast, too strong. I think there's going to be a pullback. Okay. And the other thing I want to show you was this was probably the best pair for a swing pullback trade entry last year. I'm sorry, last week. Take a look. This is the daily chart. So price pull back up to the moving averages, up to resistance with the gray rectangle. This is an area confluence where a lot of price clues come together. There's the 50, right? The blue line. Okay, price is back to between the 21 and the 50 and the gray rectangle, and then boom, right? We had a huge drop. So if you're a conservative trader and you saw this, getting in right away uh, would have given you 163 pips. Now you may say, well, look, we've got two areas of support here, just looking at the left side. Okay, so just below that, sell stop order still would have given you 108 pips, 110 pips, just below the swing lows here. But here's the best idea, and I keep mentioning this to you all the time. You have to anticipate what's going to happen. So the first thing is you're waiting for price pullback, and you know we're waiting for a sell trade, right? So we have to anticipate price bouncing off the 50 below the area of resistance to the downside. So what you want to do is place a pending sell stop order where just below these moving averages. If you would have placed a pending sell stop order right about there, you would have made at least 193 pips to the swing low here. But however, it went down again for another like 368. Another area, a little bit more conservative. Do you see this pink horizontal line? That's below the low of this huge white candle. You see that run right there? This huge white bullish engulfing candle. Okay, just below 5, 6, 7 pips below that. If you would have gotten in there conservatively and had a pending sell stop order placed there, you would have made 284 pips, right? And like I said, the most conservative is just waiting for this candle to close, would have gotten in at the open there, right? Although I would have, like I said, not I would have probably not entered a trade after this huge move. I would have waited for a pullback. But like I said, the most conservative is probably a sell stop order, pending sell stop about 6, 7, 10 pips below the swing low right here. Okay, so I believe price is going to go down further, and it's just a matter of just waiting. I think wait for the pullback would be my best advice there. Okay. Okay, just quickly to wrap up this video, we're looking at different cross pairs and which currencies are strong, which ones are weak. Well, based on last week's trading action, Japanese yen seems to be really strong. And seems to be getting stronger. Also, look out for the euro. Euro could surprise, and euro could be heading higher as far as strength is concerned. The weak pairs right now are the Australian dollar and obviously the US against most of the major currencies. It just seems to be a little bit on the weak side. So just keep that in mind. Let's have a quick look at the Canadian Japanese. So this might be a good cross pair to trade against the Japanese currency, which is really strong. The CAD is, it's strong based on what's happening in oil, but anything could happen there. So again, you can see prices come really down. Price may eventually come down to at least a swing low. So that could be one pair you could look at. Maybe just wait for a pullback. Another one, the British pound, Japanese yen. Now, this looks like a really good pair. Why? One, we've broken a long-term trend line. You can see this trend line right here. Let's see where that goes to. Oh, that's really, really long term. There we go. Okay, do you see that? Going all the way back to 2012. I've drawn in the trend line all the way to here, okay? And let me just zoom in again. So this is the weekly huge bearish candle. Looks like this probably looks like a good one to take a sell trade on. Daily here, we've got lots of room to move. At least another 300 pips to the swing low. Now remember this pair, the British pound, Japanese yen, called the GJ, that's what this is called. So it's got a lot of room to move to the downside. Again, small lots, trade with small lots because this pair does move quite a bit. Okay, so there are some pairs for you to look at. And the main thing is pay attention to price action every single day. Look for whenever price is pulling back to see if there's a swing pullback and then a breakout of a trend line to continue with the overall trend. So take a look at that, and that probably is your best trading strategy. So take care. If you have any questions, send them in to me. I'll be more than happy to answer. Happy trading and all the best. We'll talk to you again soon. Bye for now.